Hello, TradingView. I hope everybody had a nice Thanksgiving. Hello to YouTube and hello to my subscribers. How are you? Welcome back. It's been a very long time since I made a video, and the reason being is if there's nothing there for me to talk about or post, then I won't. And unfortunately, that's how it is. Other people that have always something to say, I am not one of those people. I don't know what's going on all the time. I don't have an opinion about things all the time. And I'm definitely not a storyteller. Okay, so if there's something to be said, then I will say it. All right, so let's get into this. Let's go over some of the posts. As of late, I've been seeing a little bit more. So I've been posting a little bit more. It's not because I'm lazy. All right, so the last video I made was back on, what is it, September 30th. Quite a long time. All right. So Bitcoin we had for 80,000. Okay. A little bit closer to it, but we'll talk about cryptos perhaps later. It's going in that direction for now. Okay. We had a nice little Bitcoin setup here. Okay. Look for more upside, and that worked out very, very nicely. Um, we are getting a correction right now. Okay. Fair enough. But to a Bitcoin crypto trader, we kind of yawn at this kind of stuff, right? Um, Gold Airlines. Let's talk about that. All right, that's following through very nicely to the downside. Okay, we had a. This is what it's called a drop, pop, go. Right, that's what that is. So that's looking very nicely. Space we had for a buy. Okay, and then it just kind of failed. And that's the point of this kind of analysis, right? That you're at a key area. It can go either way. It goes down, you stop out. It pops, you hold it. Okay. You can reverse it. You can say, okay, well, this is a key area and I can short this if it breaks. Okay. And then if it pops back in, I'm out. Okay. So that's why we do this kind of analysis at key areas. We just don't willy nilly go out and buy anywhere. So that one did not go as planned. Tesla, okay. The thing with Tesla is, this is a wave three ending, is what it looks like, and I think this is going to ultimately prove to be right the way the markets are going. Right, you had a little pop, but that pop that you gave us a setup, which I'll kind of jump here a little bit and then we'll go back. Gave us this setup, a classic double top. Classic. Okay. So wave three ending, and now it's starting to fall apart. All right. Let's go back. What else? Gold. Very frustrating with gold. This looked like it was going to start to break out and failed. Fair enough. Now, how did it fail is what matters. Why? Why? I'll tell you why. Because usually from failed moves, you'll get a fast move in the opposite direction. And that did not happen. That's important. That's an important piece of information. Now, here's an example. Let's look at this downtrend line, right? From failed move came a fast move to the opposite direction. It's not what's happening here. Okay, same thing here. Failed move, failed move. It's not happening. That's to me still in play for a long position in gold. Okay, I'm not convinced that it's not going to go higher. Let's just put it that way. Okay, and if it does, it will be the next wave up. Now, I'm not going to talk too much about the variant. Okay, I'll talk a little bit about it towards the end, but I just want to get through these charts. Food inflation. Now, remember, I've been talking about food inflation for a very long time. And as you can see, back in December 16th, 2019, I started talking about it. And food inflation is problematic because it creates social unrest. Okay. Now, COVID came and kind of ruined things here. Okay. And this, again, from failed moves comes a fast move in the opposite direction. So that kind of stalled things for a while. but ultimately it did break out. And this breakout is problematic because it can create another Arab Spring. Not necessarily Arab, but it will create social unrest. And this is a problem. So, taking a look at this chart again, we've seen that it has pushed higher, although it's very cluttered. Sorry about that. Uh, okay, it's pushed through even higher, 48% since the lows. Um, keep an eye on that, especially now with the new variant. If we start going back into a recession, you know, this could be affected at the same time. They're going to do what? Right? They're going to print. Get those printing presses all nice and warmed up. Only I think this time, if they don't double it or something to get half the effect, I don't think it's going to be the same thing. And that's the problem with deficits, right? Yeah, we can print to inflation. We can print for the people's economy. We can print, print, print. You cannot, no government can print value for currency. It's not possible. You can't print productivity. Okay. So what are they printing? What kind of digits are they creating? Worthless digits. And as a result, we've seen what? Inflation, right? Money is being pumped to the top 5% into Wall Street, trying to gain more economic growth, and they're not getting it. It's not going to work. It's never going to work. It hasn't worked in Venezuela. They can tell you it's working because the economy ultimately fixes itself and continues on. And they're like, look, see, it worked. No, the economy recovers on its own, right? That's how it happened before printing, and that's how it's happening after printing. It's the same thing. The problem is that if you keep doing the same fucking thing, sorry about my language, but if you keep doing the same thing, eventually you're going to figure out that it doesn't work. And when it doesn't, you're going to end up like Turkey, you're going to end up like Lebanon, Sri Lanka, right? It works great until it doesn't. And then reality hits. And that's the problem. And I remember with the Trump tax cuts, everybody's like, yeah, tax cuts. Yeah, it's going to grow the economy. Wrong. Because you got to ask yourself, and I know a lot of people don't care about macroeconomics, and that's unfortunate because if you're going to trade, you better understand macroeconomics. Well, economics doesn't agree with trading. No, you're wrong. You just don't understand how it works. So, getting back to what I was saying with the Trump tax cuts, right? Uh, the question that I asked then is like, okay, what are you going to do when there's a recession? Because back then everything looked beautiful. What are you going to do? Print? You're going to print more? What are you going to do? Lower taxes? Lower interest rate? What are you going to do? Right? You're just going to have to do more of it. And fast forward, and that's exactly what happened. They printed their little asses off. $8 trillion. Here you go. Money for everybody. Helicopter money. Everybody takes money. And then inflation comes and there's what happened? Why is there inflation? Oh, it's supply chain. It's transitory. Right. It's transitory. Sure. That's why commodities are going through the roof. Commodities are going up because of zero interest rate policies, because of massive deficits. You can sit on your home, right? Go on Amazon. I want to buy this with my stimulus check and that, and I want to buy some of that and this, right? And then suddenly, oh wait, it's supply chain. No, it's not supply chain. Supply chain is a partial problem, but there would never have been a supply chain problem unless you gave out endless of trillions of dollars. Okay, so the cart doesn't pull the horse, and never will you hear the word transitory when it comes to uh, wages rising. You'll never hear that. Why? Because it's not something that they want to push. So that's why they use it now in inflation. Like, so don't worry about it. It's only transitory. No, it's not transitory. Even if it goes to zero inflation, the damage has already been done. So you can't have it both ways. By the way, wages are falling. If you start seeing wages rising, you're like, oh yeah, great, wages are rising. If wages start to rise, you're going to start having labor cost inflation. Prices go up, and that's the problem. You push, you pull, you push, you pull, and that's the problem with inflation. Once it gets here, it can get out of control very quickly. So, anyway, let's continue on. So gold, we talked about. Food inflation, we talked about. Let's talk about Norwegian. Okay, this had a classic uh, setup for a short side, and sure enough, kaboom, down we go. So that came out good. How about the Turkish lira? Now I've talked about the Turkish lira for a very long time. How long? Well, if you go back to March 30th, okay, I kind of showed you the setup as how the Turkish lira behaves. Again, you can't print productivity. You cannot print, borrow, and import to prosperity. It doesn't work. And yet they insist that it does, and they keep doing it, and you end up with a trashed currency. They're on their way to hyperinflation the way they're behaving. Now, I made a mistake here, just so everybody understands this chart. I wanted to go short the Turkish lira, okay, and instead I went long the Turkish lira because the ticker here is backwards. No, the real ticker is U.S. dollar Turkish lira, not Turkish lira U.S. dollar. So I reversed it and it came out like this, and it shows red. Okay, but it's not really red. It should be green. All right, here's the collapse. Why? Because they wanted to lower interest rate, thinking that, oh, higher interest rates cause inflation. This is an MMT stupidity thing. Um, so again, you see that macroeconomics does matter, and it matters greatly. So you want to be a forex trader? This was a great learning experience as to how interest rates affect, how financial asset reserves matter to countries. They cannot defend the currency, and they end up destroying it. Why? Because you can't print productivity. You can't print people working. So, here's Warren Mosler, father of MMT or whatever they call him, and we had a nice little chat, and he says here, Erdogan is right. Yeah, really? Where did he say that? All the way back here. Okay, that's all the way back here. He said that. Yeah, they're going to lower interest rates. Since then, kaboom. Okay, these people are very famous, large followings, yet they don't have a clue as to what the monetary system actually works like, but they pretend they do. So, yeah, good luck with that. um, okay, so Bitcoin is a dual parallel global currency. Okay, I've said that from the beginning. Don't listen to any of the blockchain and why. The end of the day, you have a dual parallel global currency. And this is a perfect example how people are going to run to Bitcoin to try to save their hard-earned savings. Okay, you would be crazy not to. What are you going to do? Go out and buy a dollar? Good luck. Go find a dollar and what the exchange rate is going to be in Turkey today. Okay, go do the same thing with the euro or whatever. You can't. You'll pay double the exchange rate, triple. Okay, I don't even know what it is today. But again, cryptocurrencies, they were created by the private sector because there was a niche for it. There was a requirement for a safe haven, a currency that's not going to be debased. And, comes back to that again. So, so look for that one to continue to go higher. Tesla, we talked about as a funny little joke. I, the best stock to own today, by the way, which the markets are down like 2, 3, 4%, has been digital world, the Trump stock. Okay, it's actually gone up. Wow, magic. Huh? Well, there's a reason behind that, and if you want to learn, then you have to be a subscriber. All right, Turkish lira. Doesn't matter where interest rates are set by the central bank. The free market is going to ultimately set interest rates. Okay, that's gone down a little bit today, but continue to follow this to see how much higher it goes because it's based on inflation. Why would you want to have hold a Turkish lira bond that's not going to pay you inflation, at least inflation? if not more. You buy assets to make money, right? You don't buy assets for the hell of buying them and losing money, right? So keep an eye on this. Even though the central bank set interest rates to 15%, okay, not only did they go out and get 20% in the free market for that Turkish bond, they also lost 40% in the currency depreciation. Finally, AMC, this is brand new, so I'm not even going to play this, but keep an eye on this. You got the 1, 2, 3 up. Let me draw it out. You got the 1, 2, 3 up. Okay, you got the 1, 2, 3, and this is looking for more downside. All right, it's definitely broken an uptrend. There's no question about that. And remember, if they don't scare you out, they're going to wear you out, and that's something to remember. That you know, I know a lot of mean guys, not mean, meme guys went out and bought it, and no, I'm going to be rich. This is the next Bitcoin. It's going to go to whatever. I know there's a lot of those people, and I know they don't like me because I've made a lot of money shorting it. And you gotta be at least learn from this. Okay, learn from this kind of experience. Because a lot of you have not been in bear markets. You haven't seen what a bear market is. You don't know what a bear market rally looks like and what is true and what isn't. Because I know everybody wants to throw the Buffett valuation out the window. They're all like, oh, forget about Buffett. He's an idiot. No, he's not an idiot. He knows what he's doing, and you should at least have an idea as to why he does what he does. Okay. I got 3 minutes left. Overall market, I said this was a key area back here in the New York Stock Exchange, the broadest measure. And this started to break down, and the market is starting to tank. All right. I think the correction is going to be much deeper with this new variant. I think there's going to be a lot more downside after studying the charts and the market internals. So be ready. And I know there's going to be a lot of buy the dippers out there, and you've been rewarded for the last 11 years to buy the dip, and you think this is the way it is, and it's different this time. I'll tell you this: I don't know how dangerous the new NU variant is or isn't or whatever, but I'll tell you this: that eventually this is all going to start to fall apart, and corporate profits are at all-time high. Okay. Um, and that's because of deficits. Okay, remember that government deficits equals private sector savings for the top 5%, and its liabilities for the 95%. So, if you want to maintain these kind of corporate profits, which are almost 2.8 trillion per quarter, then you got to keep printing, and we may very well keep on printing. But if this earnings per share, if this corporate profits cannot maintain this level, then earnings per share will start to fall. So be careful with that. And I think going forward, we could have a market shift. For now, we're looking for a correction. We're looking for a lot more downside in stocks. The U.S. domestic risk on small caps have broken, and that's not good. Okay. Although they are still within this channel, but I suspect we will probably get as low as here, build some kind of consolidation, and then more downside if it gets bad enough. Okay, we'll talk about this. I'll probably post something, but be aware of these things. There's a lot of euphoria out there and a lot of buy the dippers. But remember, if you want to buy the dip, you got to first sell the rip, right? So that's it. It's not different this time. Believe me, it's not. All right. Take care, guys. Thank you for listening and going over my little diary here. I hope you enjoyed it. I hope you find some value. Take care, and I'll talk to you soon. Happy Thanksgiving. Have a great weekend, and talk to you soon. Bye-bye.